Hey, good day, traders. Dennis Wilburn, the active trend trader. Looks like the market may be pushing towards a follow-through day, which will put us back in a uptrend, which will also provide us an opportunity to start getting long some of the stocks and ETFs we've been watching. You're going to want to watch the video all the way through to the end. I'm going to be talking towards the end about a bullish bearish checklist, to help you decide which side of the fence you want to be on. It is the chart supporting the bulls or is it supporting the bears? Just something to keep in mind and to measure so that you're not just shooting from the hip on trying to figure out the bias to the market. But before we go on, check up in that corner over there. There'll be a drop down that'll basically explain about the AutoPilot Trading Service. But I also have a chart to show you that will hopefully catch your attention and say, you know what, I need to take a test drive on the AutoPilot Trading Service, even if it's just for 3 months. See if it's a fit for you. So with no further ado, let's go ahead and get into today's session. Away we go. So the S&P, one of the things that I've noticed is the S&P tends to basically, even though this may be a follow-through day, guess what, guys? We are still pointing down. Price action on the S&P is where? It is still below all the moving average. There's the 250. Everything is pointing down. And so therefore, what are we getting here? We are potentially getting a higher low, so that's a positive. And we'll see what happens when we get up into and retest at about the 20-day moving average or on up to the downtrending line and see how the downtrending line is very much running parallel. Anyway, the downtrend line basically connects with the past highs. And so there's a lot of overhead resistance, if you will, before we get fully back into a full-blown back into an uptrend. We need to definitely take out that high right there. And so we'll see what transpires as we move forward. Some of the things that we want to be looking at. And these are, as you're sitting there doing your checklist on your bias on who's winning the battle, the bulls or the bears. We can look over here on the weekly chart, recognize this is just Wednesday. And so the candlestick for this week is not complete. However, we are working off of a hammer on the S&P right here from last week. So that is a valid bullish reversal signal. And as long as the low of that candlestick right from 2 weeks ago is not undercut, that remains a valid reversal signal. But as you can see, the range there was quite large. And so there's, with all the wick being support zone, there's a lot of room for the S&P to be maneuvering within that. And let's see what happens. Again, on the weekly chart, what's happening? The moving averages are all, still rolling over. We'll see if they play catcher. And what I mean is that do they catch the price action moving up and then repel it from there to send us down one more time? We shall see. I mean, right now, don't know, but those are the areas where I would look at potential opportunities, and there's two of them. And the first of them is, first opportunity is basically back here retesting these lows, and the other one is testing them up here in the moving averages. We jump up there, that would be an opportunity to, and that corresponds on the daily chart, is back up in this area right in there. We move back up into there. That would give us an opportunity to, and we stall, that's your trigger to get back into a downside trade through either options and or doing SPXU. NASDAQ, as we see, NASDAQ is basically pushing on up. Again, we had a nice reversal candlestick yesterday. This is kind of inverted hammer slash spinning top doji right at support. The momentum on the daily chart, TSI, turning up. We had a two-line cluster a couple of days ago, as you see right here. And typically, when you have a two-line cluster, within 1 to 4 trading periods, in this case they're days, we can expect a reversal. So we did 1, 2 days. We had the reversal. Now, will it continue to move up? We don't know. However, similar type situation. We had a hammer from 2 weeks ago. As of right now, if this was the close on Friday, we could say we had 2 hammers. But it is an indication that, look to the left. What do you see? High level of strong support where price actions broke out of before, then retested. And the long wicks on the candlesticks are showing us that's where support is coming in. So again, I would look at any type of a retest back down there, about the, let's say, the 321 to 322 area, for to go long with a stop immediately below these lows, and or a push back up into the 20-day moving average and a stall. It's a 2-step process, folks, and a stall out that would give us an opportunity to get short the market there. And again, you're looking at either SQQ or for the downside, well, SQQ, which is the inverse ETF, or TQQ if you want to trade the leverage to the upside, and or a call or a put type of trade, bullish or bearish. It's your call. IWM, Russell. I've mentioned that Russell appears to be moving back into a sideways lateral type level of support resistance, and a range like it did last year. Hold on a second, I want to modify that. Okay, let's put it out there a few months. There we go. That is a level of past support, and this, when you look at this on IWM, this is about a 10% move from the low to the high, and so it's done that right now once, twice, maybe reversing here. This is basically a fair for any stock that's in a range, coming down and just testing into the midsection can be a very positive bullish signal to the upside. We'll see if we break on back out and move up into this area. The thing that I want to be aware of on IWM, of course, is it tends to get stuck in trading ranges. Now that trading range, just be aware, how much juice is in that trading range. Well, as we go here, pick up that low, up to that high, that's 11%. If I'm trading the leveraged ETFs, TNA when we're moving up and TZA when IWM is moving down, then that equates to about a 30% move. And so far it's done it once, twice this year. Last year, it moved within that 10% range for the whole year, going back to January 2021. So that's what we have going on there. A couple of stocks that I'm taking a look at that you may want to also take a look at is I'm looking at Zim. Zim just reported. I've had our AutoPilot Trading top 5 list. We traded Zim last year from here to here, and then we traded again this year from here to here. Got out of it prior to earnings with a nice profit. Let me get rid of remove that. So what are we doing here? We had a breakout above these highs. So a breakout, but it looks like it's turned into a breakout fake out. Now, could we continue to move higher? Sure, we could. I like Zim, but on a pullback into the moving average, and we project out where the moving averages are going to be, is we're probably looking at about the 72.30 level would be where I would be, wanting to pick that up off the 8-day moving average, and maybe the $71. The other area that we want to be looking at, or again, this is a weekly chart, I can project up that 8-period moving average on a weekly is going to be about $68.93 next week. You see right back into those lows. That would be an ideal place also just to float a conditional order out there to buy at that point. The So one of the things I was talking about earlier is I want to take a look at, some rules, some checklists, a checklist to basically, am I bearish or am I bullish? And so I'm going to run back over here to the S&P, and we'll walk through this checklist. First of all, I want to take a look at what is my trend, and both long-term and short-term. And if we look here on the weekly chart, or the daily chart, the trend is definitely down. Lower lows, lower highs, lower lows, lower high. And now we're stuck in the middle, stuck in the no man's zone. What about on the weekly? Well, the trend also is down. Where's price action compared to the moving averages? On the weekly chart, they're below them. So some people have a propensity to say, hey, if price action is not above the 50-day moving average, I'm not going to trade it to the upside. That's a choice each individual trader needs to make. We have to also be aware that there are counter trend trades, and counter trend trades can work against you, but a counter trend trade back up into the moving average, a reversion to the mean. We all have to decide, well, is there enough juice there to be able to make that trade? And so if I were to take a trade towards these lows, or like right here, or even down here, but let's take it right here. If I trade back up into the 20-day moving average, well, it's 15.5%. It's 3.72%, but it's $15. And so clearly, could I trade that profitably? Yes. However, I would need to lower my expectations. I wouldn't be expecting a 5-10% run on this. I would be expecting a smaller run. What about I could jump onto UPRO, similar type situation. And what happens if the UPRO from that low there up to the midsection, it's about a 12 to 13% move, or approximately three times the daily move. So that would go $6.14. Is that tradable? Yes. At the same time, though, what's kind of the higher probability trade is wait till price actions get up into the moving averages, like the 30-day moving average there. And if then it hits that and rolls back around and falls down to the low, well, there's 14%, but the projection is it could go even lower than that. Because why? We're in a downtrend. So the other thing I do is once I'm establishing where I'm located at, I look for reversal candlesticks. Do we have them? Not on a daily basis, except for this one right over here, which is still valid. We still have a bullish reversal signal valid on the daily from about 2 weeks ago. But I also have these long wick candlestick on the weekly chart, so that takes care of that. Then secondly, where am I compared to past lows? And what I'll do there is I will project out from, I can take that low there. There we go. And let's project that over to the left, if you will. And clearly you can see we had a breakout and it came back and retest at almost the same level as that, the 48.14 level on UPRO. And you can say the same thing for the SPY. The spider came down, test about the same area. Again, look to your left, and what do you see? Is there a potential level of support? That was a former level of either support or resistance. Yes, there is. And then the other thing I want to be looking at then is on the indicators. The daily indicators, are they oversold? Are they below the mid-level here on the TSI? I won't get into market forecasts, but just on the TSI, are they look like they're reversing? Yes, they do. Okay. However, this is divergent to what we're seeing here on the weekly charts. Well, still shows our momentum's going down. Now, is it starting to bend up? Well, not bend up, but lessen its fall. It appears to be, but at this particular point, we are still facing down. We're still facing down. It's well below the midpoint. And so do I have any positive divergence on this? On the weekly charts, no. However, on the daily charts, yeah, a little bit of a positive divergence. I hit this high over here, down here, and then we're down below that here. And we had a positive divergence across here as we were actually coming down and making newer lows. So again, have I had a momentum shift on the weekly and the daily chart? That's my other checkpoint. And the answer to that is yes on the daily, no on the weekly. So then the other last question I have to answer, do I have enough information right now, or are price action at a proper point where I can place a conditional order with confidence? And the fact of the matter is the answer to that is no, I cannot, because as I identified earlier, where does the price action become interesting to me? Back up here against the 20-day moving average, or against this downtrend line for a bearish trade, down to the low from yesterday, or even this line right here, would give us an indication that that's where I could trigger into a potential trade to move up. Was today a positive day? Yes. Was it a follow-through day? Possibly. I'll have to wait till Investor Business Daily reports out to let us know that that is in fact the case. So that's the checklist. If you're interested in that, hey, drop me a note and say, hey, Dennis, I'd really like to get a copy of that checklist because I'm working on formulating it to send it out to folks. And just drop a note in the comments saying, hey, Dennis, yeah, I'd like to get that. Shoot along your email, and I will basically get that out to you. The other thing I want to share with you really quick is I am working on a presentation that'll probably take place over I'm working on a presentation that I will be doing about the leverage ETFs. Leverage ETFs are just absolutely phenomenal. And if you are really tight for time and doing in your research and all that kind of stuff, please join us with the AutoPilot Trading Service for the ETFs and the top 5 stocks. It's a combination service now. But look at what we see here. What we're looking for is something that will compound at a minimum of 100% per year. And then basically waiting and getting the triggers to get into that. And that's what I send out with the AutoPilot ETF and top 5 weekly checklist. But look what took place over the last 2 years in TQQ. We had significant moves. Now, of course, this was after the COVID bear market, but it took off in 24 weeks. It ran 444%. The other thing that I'm working on is basically defining and showing people, okay, here's how not only do you get into this, take profits on the way up, but ride it out for the long term to take a bigger portion of that 444%. And then later on, 96% move in 16 weeks. That was at the end of 2020. Then we had another move here in 2021, 74% in 16 weeks. And then a little shorter move here, 57% in 8 weeks to finish up 2021. And these leverage ETFs that I've been basically studying and trading now for a good 10 years, they basically are, it's almost like, I won't call it the secret sauce, but if a person will focus just on those, refine the focus down to those, it gives some tremendous opportunities for high probability movements to the upside, and they also have downside components in that inverse ETFs. But in reality, if we can jump on just the bullish leverage ETFs and take advantage of those moves and be able to be in the trade to take, let's say pick out 2/3 of the total move, because I practice a very simple approach. I take profits at 10%. I take profits at 20 to 25% on a third of my position size. And then I want that last third, let my profits run. And we've identified some mechanics on how you can make that happen also. So anyway, until next time, I want to say aloha, God bless everybody. Again, if you have any thoughts, leave a comment and join us on Friday for the Trade Your Way to Wealth webinar. We do at 11 o'clock Pacific time, and it's live for about 20 minutes. We'll talk about some stocks, talk about the indexes, and hopefully provide some solutions to the way, to help you trade better. Because my ultimate goal is very simple, to help traders, no matter where you're at in your trading career, grow your wealth and reach financial freedom. Aloha, God bless everybody.